Welcome back. It's time now to take a look at the top business stories. The IFC in global drive to attract new businesses. GCC's combined current account to widen due to higher oil prices. And US President introduces measures to increase domestic oil drilling. Let's look at the equity markets first. The UAE bourses both fell 0.7% today. The DFM closed the session at 1,585 points. Arab Tech Holding lost 1.5%. DP World dropped 0.7%. Drake & Skull was down 0.9%, and the Dubai financial market lost 1.6%. Stocks to gain mainly came from the insurance sector. Dubai Insurance, for instance, rallied 6.9%. Takaful House was up 2.4%, and Takaful Emirate gained 1.7%. 152 million shares were traded, valued at 144 million dirhams. And over in the capital, the ADX dropped 0.7% to close at 2,655 points, with the banking sector falling the most. United Arab Bank dropped 10%, National Bank of Fujairah fell 9.9%, and First Gulf Bank was down 1.1%. Abu Dhabi Islamic Bank, however, gained 0.3%, and Sharjah Islamic Bank was up 1.1%. Suru Real Estate was down 1.5%, and RAK Properties fell 2.5%. Etisalat was also among the losers. Its shares fell 0.5%. 55 million shares were traded, valued at 84 million dirhams. And let's now take a look at the GCC markets, which ended mainly lower today. And now to our top stories. A senior DIFC delegation has completed the second stage of its international campaign to strengthen relationships with existing clients planning to grow their business in the region. Also, the DIFC delegation is seeking new clients to help them profit from the opportunities in regional markets. The CEO of the financial center, Abdullah Mohammed Al-Avar, told a local paper that there is strong interest from companies in the US and Brazil in capturing the next wave of growth in the emerging markets and get access to business opportunities in the Middle East, Africa, and South Asia. The next stage is scheduled for later this month and involves meetings in China, South Korea, Malaysia, and Brunei. According to Washington-based think tank Institute for International Finance, the GCC's overall current account balance is expected to widen significantly due to the recent strong rise in oil prices. The higher the current account, the more a region exports, which consequently means the wealthier it gets. The GCC region's current account will rise from $129 billion in 2010 to $292 billion this year, so by 163. Hydrocarbon exports contribute the most to the rise in the current account surplus. Export revenues from oil and gas will rise from $448 billion to $681 billion in 2011. As a result, the GCC's gross foreign assets are projected to rise from $1.5 trillion to $1.7 trillion this year. It's less than a week to go before the index compiler MSCI makes its decision on whether the UAE and Qatar will become part of its emerging market index. Experts say now that the majority of Q1 results are reported, most likely two countries' exchanges will implement measures on how to boost their position for an upgrade to emerging market status. Stocks in the UAE and Qatar have seen a surge in investor confidence recently and are expected to be raised from frontier to emerging market status by the MSCI next month. The upgrade will increase investors' interest and boost trading volumes. The implementation of delivery versus payment system is also said to help the UAE and Qatar become emerging markets. And in our fast financial news, India and China emerged as the UAE's top trade partners last year, dominating more than a third of non-oil commercial exchange. The UAE witnessed a 14% rise in non-oil trade in 2010 to 705 billion dirhams. India came in top, followed closely by China and the EU. The UAE's Al Dara Agriculture Company has invested $20 million into a Nambian date farm. The investment was made to boost the supply of dates over the summer season across the Middle East. 2,500 tons of dates are expected to be exported per year once the farm is fully cultivated. Abu Dhabi National Insurance Company reported a net profit for the first quarter of the year of 78 million dirhams. That's a plus of 15% compared to the same period a year earlier. The insurance firm also saw a 90% increase in net underwriting income of 93 million dirhams, up from 78 million for the same quarter in 2010. And after the break, we'll run you through what's making the headlines in international business today.